Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. If you look at the global cues, mixed picture as we've been seeing over the last few days. Wall Street is coming off a positive session despite Trump's tariff threats. Asian markets were mixed, but a lot of data as well to digest when it comes to the Asian region, right? Because China data came out. GDP figures were above as declined further to 7.72 vis-a-vis 0.76 in the previous session. And if you look at the stocks that will be in F&O ban, no new additions or deletions, but a few stocks will remain in F&O ban, the likes of Glenmark Pharma, Hindustan Copper, as well as RBL Bank. But on that note, quickly bring on board our technical expert for today. Joining me is Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, lovely chatting with you. Tuesday morning, cues are mixed, but 25,000 still on the charts, so we'll take heart from that. But what are you sensing? Do you think we'll slip below that crucial level today, or are we going to be able to defend that once again like we did yesterday?
Yeah, good morning, Nandita. So, Nandita, yes, means last week it was a damage to the structure in which we were, already trading in means a decisive recovery trend and more of time-wise correction. But the last two trading session of the last week and the extension of the same with starting of this week indicates that the kind of momentum that we were seeing in the market that has fizzled out means we have slipped below the 20 EMA, which was placed around 25 to 80 area, and the zone means the consolidation range that earlier we were trading in for almost 4 or 5 weeks means 25 200 24 500. We have re-entered into that zone. So yes, 25,000 900 is a strong support area, and yesterday Nifty could manage to defend that area. But I believe that is likely to be consolidation more with a negative bias, after this break of 20 EMA. So until let's say we reclaim 25 to 50, one should not be outrightly bullish or look for excessive or recovery opportunity or rebound opportunities. In fact, a recovery towards 25 to 50 would considered as a shorting opportunity in the index, with 24,900 being the target zone. So as of now, the bias has shifted from positive to sideways to negative. And the only silver lining is that banking is still holding strong. So we have to wait and watch because we have key results over the weekend for HDFC and ICICI. By IT is not helping in any ways. In fact, it is pushing the index lower almost at the month low.
So yes, the earnings season has kicked off on a bleak note, but banking, as you mentioned, is being is managing to hold out. But if you look at the bank index per se, we are below 57,000 levels that was being looked upon as a crucial level. But now that we are below that level, would you be working with 56,500, or would you say that that yesterday the fact that Bank Nifty made a good recovery from intraday lows, does it make it well poised to extend those gains in today's session?
So yes, in fact, Ananta, still on the banking index, we are holding 20 EMA, which is important. Means on the intraday basis, we breached that mark for brief. We on the closing, we managed to hold that area. So as of now, yes, 56,500, 56,300 is a zone basically where we have multiple supports in the banking index. But since we are seeing mixed trend within the private banking heavyweights, means ICICI, HDFC, they all are witnessing some bit of a profit taking. Kotak is also witnessing a similar kind of attraction. So in such a scenario, only PSUs helping the index. So it can't be outrightly a bullish momentum in the banking space with PSU holding ground. So we need to see whether the private banking majors also start participating and witness some traction. But as of now, it looks like sideways to me with this comparatively better structure than the Nifty index.
Okay, taking your point, since we are talking about banks, couple of banking names on our query section. I think Varsha Gajjar wants to know your thoughts on HDFC Bank. Axis Bank reports numbers tomorrow, and as you mentioned, likes of HDFC, ICICI will also come out over the weekend. What's your positioning on these three stocks ahead of earnings?
So, see, HDFC, ICICI, they all are holding around their record highs. Means, yes, we are seeing consolidation after every recovery attempt, but as long as they are maintaining the positive tone and witnesses, more of time-wise correction, it is okay. So, for HDFC particularly, we are seeing this 1940, 1960 zone acting as an immediate support. So, very short term, in case if the view is, let's say, for a day or two before the earnings, then that should be the stop loss. Obviously, earning triggers volatility. So the stop loss should be deeper around 1940 area. So with that as the stop loss, one can continue to stay put. Because once we, let's say, cross this 2020 barrier in HDFC, we can see the stock inching towards a newer highs. ICICI looks comparatively weaker than the HDFC Bank. So 1400 to 1470 is broadly the range. We are closer to the lower band, so that gives us comfort that there could be an attempt of recovery. But as of now, if somebody has to prefer among these two, I feel that HDFC is a better bet.
Okay, HDFC rather is a better bet. I hope that answers your query, Varsha. We'll take up more queries as we go along the show, but just about a minute to go for the market to open. I want to get in your recommendations first, Ajit, for the day.
Right. So defensives means FMCG pharma. After a long underperformance, specifically in the FMCG, we are seeing sustained buying interest now. And among all the majors, ITC have started forming a base. So where the risk reward is favorable and a potential of strong up move seems high. So with stop at 410, one can buy ITC at current levels with 436 as a target area. And then we have from the healthcare basket, Max Health. After the marginal retracement from its record high area, it again rebounded strongly in yesterday's trade, and we expect this to build further in sessions to come. So 1350 is what we are eyeing in Max Healthcare. Here you can also go long with 1210 as a stop loss.
Okay, those were the recommendations, and we're getting the first ticks, and it is a green tick. So we'll take heart from the fact that we are seeing a 60-point up move on the Nifty this morning ahead of the Tesla's India showroom launch. But looking at the open, let's talk about the tech names first, Ajit. Some buying emerging after sessions of sell-off. Anything that you like? Because HCL Tech isn't reacting very positively to its numbers. It was a big miss on the margins. Perhaps Street is focusing more on that. But chartically, if you put all four together, HCL Tech, Infosys, TCS, etc., which one would catch your eye?
So Nandita, so far, last month it was recovery for IT index almost 4%, and this month so far we have almost retraced the entire gains. So IT majors are basically not helping in any ways. In fact, so far only Infosys is something that where we have not seen any major cut yet. Maybe market is anticipating that they might come out with the better numbers. But still the upside seems capped. So all the IT majors, be it TCS, HCL Tech, and Infosys, short-term bias looks sideways to negative. But among all these names, if the view is, let's say, for 6 months to a year, HCL Tech definitely is the better bet, considering its past outperformance and possibility of stability or on a base formation around 1500 marks, so which is 80 points down from the current area. So if somebody is having a view, let's say for 6 months to a year, they can start accumulating HCL around 1500 mark.
Okay, start accumulating HCL Tech around the 1500 mark. In terms of guidance, just want to point out that revenue growth guidance, the lower end of the guidance has been raised to 3% from 2%. So the FY26 revenue guidance is now 3 to 5% vis-a-vis 2 to 5% earlier, and EBIT margin guidance has been scaled down from 18 to 19% to 17 to 18%. Perhaps the street is focusing more on that, and which is why the stock is down and among the top Nifty laggards. But the management has also said that two large deals that were expected to close in Q1 were delayed due to procedural reasons, but they are now likely to conclude within July. So that impact will be felt in the second quarter as well. But we've had some mixed views from brokerages. We have had upgrades as well, and one downgrade as well. Jefferies has upgraded the stock, and I think it's Nuvama that has downgraded the stock. But let's talk about the next stock. Tata Tech numbers came out. Net profit was down almost 10% on a quarter-on-quarter basis, but it was still better than what the street was anticipating. Revenues slipped over 3%. That was also better than what the street was working with. EBIT margin rather has been at 13.6% vis-a-vis 15.7%. That is something that was below expectations. But the stock is up 2% or so, and we have a Goldman Sachs report on this stock after its numbers. It has maintained a sell call with target price of 560 rupees, implying quite a bit of a downside from current levels. They believe that the first quarter numbers were in line with expectations, although EBITDA margins missed expectations by 80 basis point due to soft core services revenue and negative operating leverage. But sequential pickup in revenue is expected in the second quarter on improved customer engagement and even onwards June. Tata Tech, any thoughts on this particular chart? Targets here being scaled down to somewhere around 560, 550. What are your own thoughts as to where this stock is headed now on the charts?
So, Nandita, since listing, we are seeing that every attempt of recovery, it's usually fizzle out, once the stock reaches to its crucial resistance area. And this time around also, it was a similar case, means the stock did witness a rebound towards 800 mark, but it couldn't sustain or surpass the major hurdle around, the long-term averages. And though we are seeing a recovery attempt, but at present, I'm still not sure that whether this recovery would unfold into a trend reversal so far. So for those who are, sitting on the long side in the stock for now, 695 should be the strict stop loss, because there could be a possibility of recovery attempt once, let's say, we surpass 735 area towards 770, 775. But around that area, again, we might face strong resistance. So fresh buying is definitely something one should avoid. But for those who are playing for a rebound, 695 should be the strict stop.
Okay, that's a view on Tata Tech. But let's also talk about Ola Electric. The stock is up in excess of 20% in the last 2 days. Today as well, it's extending its gains. It hit a fresh low as well, and it's quite a while away from its IPO price of 76. But almost around that 50 level, is this a massive trend reversal on the charts? And is this a good buy at the current juncture after the recovery?
So Nanda, in fact, I believe that a lot of retail clients would have been stuck in this stock since the trend has been gradually down, means, as I can see from the record highs of around 157 to roughly around 40 levels. So yesterday was the first day of decisive buying interest, means the volumes were almost 6 times, 7 times of the average volumes, roughly around 60 crores is something that we witnessed yesterday. So no doubt there could be a recovery attempt where the stock might inch toward 52, 53 area. So very short term, yes, you can continue to hold. Now your stop should be at 43. But risk reward is not favorable, to be honest, even at current levels. So I would rather sit on sidelines, wait for some confirmation, sustenance above 52 mark, 53 mark. Then only I will consider it for any short term bets.
All right, got your point on Ola Electric. That's the view. But as promised, let's shift focus to our viewer queries then and start with those that we couldn't take up yesterday. I want to take up the first one from Alex. Wants your thoughts on KEC International. He wants to know the major support levels with a time horizon of 1 year in mind. The stock is doing pretty okay today, but in the last 1 month, it hasn't really done anything. It's just about 2% in the negative.
That's true.
It's somewhere in the mid level between 52-week high and 52-week low. So what is the kind of support one should watch out for the next 1 year?
Samantha, after this slide from 1300 to 600, the stock has rebounded and now we're in the middle of that range. I believe that 650, where we have the long-term averages placed, if the view is, let's say, for long-term, that's the major area where one should be, again, may see buying interest emerging. At the same time, immediate around 780, also we believe that, the stock might find buyers in case if there will be any further dip. So as of now, 780 should be the area where one should maintain stop. And let's say once we cross 950 area, then definitely, this level around 750 can be cemented for the entire year. Because in that case, the stock might attempt a recovery towards its record highs. So as of now, 780 first support, 650 major.
Okay, those are the levels. I hope you've taken note of them. Next query from Debu K wants to know your thoughts on Gravita India for an investment purpose. The stock has not had a very great run. If you look at the YTD performance, down 20%. Last 1 month, it has flattened out. So, is it a good time to take a positional view on this particular stock at 1736?
So yes, Nanda, it's been a very strong performer in past. Means if you see that from 2021, roughly around 200 to 2600 kind of a journey, it's natural for the stock to spend some time in corrective or profit taking phase, and that is what we are seeing in the stock for almost 1.5 years now. So outrightly, I won't recommend buying. Means one should gradually accumulate. Means the zone close to around 17, rather 1600 to 1500 zone is the best area to look for accumulation with a time horizon of for a year or more than that. And upside, once let's say we cross 2100 mark barrier, then we'll see the fresh leg of momentum. So as of now, one should refrain from any fresh position, wait for any dip around 1600, 1500 zone, and then accumulate.
Okay. All right, that's the view. Accumulate around 1600 zones. That's the call. Hope that answers your query. Let's take up a query on Bharti Airtel. Komal Makecha wants to know your thoughts. When is the right time to enter this stock for the long term? The stock has been a good performer. Just come under some bit of consolidation, but still very close to its 52-week highs. Is this a good time to buy, or would you advise someone to wait it out a bit before getting into the stock at these levels?
So see, the view is long term, then one should definitely wait because as you rightly mentioned that again here also we were seeing almost outrightly a very bullish steady uptrend, and finally we have started seeing some bit of a profit taking, decisive profit taking, especially in the last week. In the range of roughly around 1750 to 1800 could be the zone where we might see the stock finding strong buying interest. So one should wait for that area if the view is let's say long term. For short term, traders, in case if you have any existing position, 1890, that should be the stop, and use any recovery around 1950, 1960 area to reduce your positions.
Okay, that's the view on Bharti Airtel. Hope that helps. Let's take up a query on the defense pack. Bharat Electronics, to be precise. Kartikeya Singh wants to know what should be done with this stock during this correction phase. What are the levels that can be added for the long term? The stock is still near about its 52-week highs. How do you navigate these stocks now? Because they once again started consolidating, but for Bharat Electronics in particular, it's still near about its 52-week highs. Risk reward wise, how are you viewing some of these names?
So Nanda, if you see the defense basket, in fact, last week we've shared an update with our clients that the index has been experiencing more of distribution trend, and that's the reason why we've recommended to reduce their position, long position in the defense counters, including BEL. if the view is short term. So we reiterate that view that after this strong outperformance, we may see consolidation of profit taking, including in BEL. But yes, as you rightly mentioned, it's still among the top performing name within the defense basket. So comparatively, the downside seems capped. So maybe around 390, 380 area. There we might see a first leg of buying interest emerging. But since the view is long term, one should wait for any decisive consolidation. Because from roughly around 240 to around 420, it was almost a vertical rise. So let the stock consolidate a bit before you make any fresh bet, even for the long terms.
Okay, that's the call, Kartikeya. Let the stock consolidate and then perhaps take a call. But 380, 390, that's the one level that Ajit really mentioned on the stock. Last couple of queries then. Want to take up this one on L&T from Satish Guntur. What do you do with the likes of an L&T that's just been stuck in a range? It refuses to move out. If you look at the long-term charts, not even long-term, medium-term, 6-month kind of charts, the stock hasn't gone anywhere. How do you approach this particular counter?
So yes, Nandita, see, when it comes to certain stocks, they are proxy to the infra space, and still, if you when it comes to trading, yes, it's important that you should stick with the quality names. But if those names are under consolidation or witnessing a range bound move, like what we were experiencing in SDFC some time back, so there's no point arguing with the market. So in case if the view is short term, definitely you should avoid it. And until we, let's say, break this 3750 area, you can write it down in your notebook or you can put an alert. Until we break that mark, I doubt that we can see any meaningful, strong or decisive recovery in the stock. Downside also seems capped, so close from 3400 is something that we may see as a immediate support. So for an investor, it's basically the time where one can look to accumulate on dips. But for a trader, it's definitely a big no that until we break this upper hurdle.
Okay, so those are the levels, and basically untouchable unless we break below that particular level. But last query then, I'm getting one on Piramal Pharma. This is coming in from Gurpreet Singh. Hasn't really sent in a pointed query, but any thoughts? The stock is seeing good traction, has seen a good up move in the last month or so. Recovering, so to say, because last 6 months it has given negative returns. Within the pharma basket, does it catch your eye, Piramal Pharma?
So we started seeing some traction of late. And that means the stock has reclaimed its short-term averages, long-term averages now, and the volumes are also okay. So yes, if the view is very short-term, one can look for a trading position with 225, 230 as a positional target and 195 as a stop. But in case if somebody is looking for a better alternative, then Wokhart, Star, Biocon, these are the better names within the pharma basket where one can look at.
Okay, that's the view on some of these pharma names. Hope that answers your query. You have better names within the pharma basket to look at. But with that, we've come to the end of the query segment. If you couldn't take up your queries today, well, we'll take it tomorrow. But Ajit, I would like to thank you for taking out time and joining in and sharing your thoughts. Always a pleasure, and I look forward to our next interaction as well.
Same here, Nanda. Thank you. Thanks a lot.
Thanks a lot. Have a great day.
Same to you.
Well, we are holding on to the opening gains, 25,130 on the charts when it comes to the Nifty. A cool 150 point up move on the Sensex as well. Mid-cap index continues, like Kotak Mahindra Bank also doing well, and so is Bharti Airtel and Reliance Industries as well. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. 10:30 is when the Tesla showroom in Mumbai, that's the launch time, and of course watch out for that. And of course, stay tuned to Moneycontrol for all your other news and updates. I'll see you at 3:30 p.m. with closing bell. Don't forget to tune in then. Thank you for watching.